Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor. All right, welcome to another episode of Future Money, where we talk about the investments of the future
that will make us money.
All right. Well, happy
birthday, America.
Happy post 4th of July.
Yeah, my favorite holiday.
Is it your favorite holiday?
Yeah.
Is it because you're French? Is that why it's your favorite holiday? French, Tunisian?
I think it's non-denominational.
Okay.
So
nice.
I think everyone celebrates it.
Yeah.
You know, you have no reason not to celebrate this country. You know.
I mean, I think a lot of people will disagree, but there's lots of. Let's just rephrase it to say, there's lots of reasons to celebrate.
Yeah.
In spite of the also other reasons to not celebrate.
Correct.
Yeah.
Well, I think listen, I'm always like a glass half full kind of guy.
No, you're a glass 80% full kind of guy,
which is great.
Yeah, it's awesome. Sometimes the glass is empty, and you're like, nah, that's full.
But anyhow, it's summertime.
Yeah,
right.
Always
weather
fun.
is amazing. I think LA is fantastic. July 4th.
Yeah.
So it's
fun. You know, next year is actually the 250 year.
Crazy.
So it's the quarter century. I think there's an actual real word for it in English, which I'm not even gonna attempt.
What is this, like centennial?
No, I think it's the sesquicentennial, if I'm not mistaken, but I'm not 100% sure on that. So don't. I'll need to fact check that one.
So yeah, America. I mean,
yeah.
What an experience, right?
Yeah.
What an experiment, you should say.
It really is funny because it is a legit experiment. It's kind of the only country that sort of, obviously we had the, France and England and all those revolutions that happened, but America really kind of is the only country. It sort of stands by itself, for better or worse, in the way our sort of democracy works.
Yeah, well, I mean, we copied some other stuff, right? That's what the founding fathers
we pulled from stuff.
Yeah,
mostly the Romans. Interestingly enough,
Romans, right?
Very little from the Brits, funnily enough. Well, we have two houses.
Yeah,
that's what we took from the Brits. So that we have the Congress has two houses.
I just watched the show Lincoln on Apple TV Plus. And it's really fascinating what those guys have done to get us here. I mean, it's just such a different time.
It's so interesting that you say that. We talk a lot about how I love history and science on this podcast, but I always tell people, much like you're an 80%, half full. I know that doesn't make any sense math wise, but I do consider myself a glass half full kind of guy too. I usually call myself a realistic optimist. That's kind of how I describe myself. And people always talk about how bad things are, how terrible things are, et cetera, et cetera. And if you go back through history, you could see how much worse things were back then. And also, there's a lot of talk about the debate and, the two candidates and what's going on. But, if you think about Lincoln, who's probably regarded today as the greatest president ever in American history, think about how much people hated him in the 1860s. We live in history through rose-colored glasses, right?
Totally. I mean, we pick up whatever stories we want, right?
Totally.
Yeah.
But think about the fact that the entire country was in civil war.
Yeah.
and how bad that is. And now we think of Lincoln as the greatest president ever. Yeah. So it's just, we have to keep things in perspective. We always think things are the worst when we're living them.
Yeah, and I think this is also very true to investments, right?
Yeah.
You have to remove those binoculars and look at bigger themes, right?
Yeah, for sure.
And it's important not to think short term. It's really important.
100%.
Listen, you can get lucky, you can buy stock, goes up, blah blah blah. But ultimately, long-term trends play out over many, many years.
Yeah.
Secular bull markets last for 10 years or 7 years plus, right? So you have to really, whenever you think about your money and investing, you always have to think in those long terms.
Absolutely.
And also, you have to get through those tough times to get the benefits of the long term.
100%.
Right?
Yeah. So we're going to be talking about kind of this year, right? This, we passed the mid-year point,
Correct.
mid-year outlook. We're going to talk about kind of what to expect at the end of the year.
Yep.
But I think it's important to note what you're talking about, the long term, and you mentioned the word secular bull market.
Yep.
And so let's just give a little bit of dictionary definitions here for people, right? That a sort of a bull market, right?
Yep.
Very simply is, the market goes up, right?
More than 20%,
20%, that's the technical term.
Correct.
Explain what a secular bull market is.
Secular bull market plays itself over a longer period of time, where there is a full-on economic cycle that's playing out, right? And those secular bull market that has been, I don't know, since we have for the last 100 years or so of history, there's maybe 7 or 8 of them, and those lasted for between 7 and 15 years.
Yeah.
Right.
And they're usually centered around some kind of theme, right? Some kind of investment thesis that is causing this, whether it was the internet and or the PC/internet in the 90s, or mobility/social media in the
that's exactly it. There's always some kind of economic change that is really changing the way that people are thinking about the world. And we're going through one right now.
Or like the post-war, in the more past, right, in the 40s and 50s, after post-World War II.
Rebuilding of Europe.
We had the rebuilding of America, Europe, right? The sort of like post-war industrialization was one of those.
And that's, I think, was the longest one, post-50s to the 60s, was almost 20 years or so.
Yeah. And I think it's interesting to note also, though, that the secular markets, right, in the 50s or, in the 1900s or late 1800s, the bull markets possibly could last a longer period of time because things moved more slowly, information traveled more slowly, and volatility, although it existed, was not like today, like where things moved at the speed of light, basically.
Yeah. Right? And those are some of the changes. So let's kind of recap the year.
Yeah.
And again, July, half year. I don't think any of us knew that we're going to have such a great, strong year this year.
Yeah, I think we expected a more of a bull, case, but frankly, we probably expected to be here at the end of the year, maybe.
Right. Yeah.
Maybe.
So the S&P in perspective is up 17% for the half year, right?
Yeah, for the first half of the year, after a 25% gain last year.
Last year, almost. Yeah,
I think so. 23, 25, something like that. So we've had a pretty good run over the last 18 months. And to your point, right? It's been 18 months.
Yeah.
Kind of, if you go back to our podcast over the last 18 months, you'll kind of see the theme that we've been talking about playing out, which is what ultimately is driving this secular bull market, right? In 2022, markets freaked out, feds were raising rates, inflation, all this kind of stuff, which is, again, markets will do this, and you have to be able to stay the course, and you have to be able to invest for the long run. Yeah. But at the end of 2022, beginning of 2023, the Chat GPT moments happened. This was your I don't know if I would equate it to the "you've got mail" moment in AOL, or the maybe it's the when Steve Jobs talked to his PC in the early 90s. But that moment was what we feel, right? We're still it's still playing out, but what we feel is this AI secular bull trend that we've been talking about over the last 18 months.
But I think also I would argue that interest rates have been the main driver, right? In 2022, interest rates have gone up so much. And what this month presents is a 1-year anniversary from the Fed stopping to raise interest rates.
Right.
And that really kind of signaled to the markets like, hey, listen, things are going to get better eventually. We're not going to keep raising rates. Inflation is starting to moderate a little bit or come down, right?
But you wouldn't expect, right? There's a pause, and historically we would have had a cut by now, right? This is one of the longest pauses ever now, as we call it, right? So the Fed is not raising rates anymore. but rates haven't come down.
Yeah.
Right.
Which is, and this kind of is a testament to how disruptive what COVID has done to us.
Yeah.
And all the things that happened post-COVID, right?
Yeah.
And we're still kind of working through those dislocations in the economy, right?
Totally. But I do think if we don't have a secular bull story like AI, I don't believe we're where we at today.
I agree, 100%.
No, and you can see this in all the mega cap tech names, the Mag 7 that we keep talking about.
So let's talk about that. Like it's I think the S&P is down up 17%, but I think 80% of those gains are the Mag 7.
The Mag 7 are most of those gains. The Mag 7 now make up 35%.
That's insane.
Of the S&P.
NVIDIA
500. The S&P 500, 35% is made of 7 companies. Which is insane. And we haven't added, like a few other, big ones like Eli Lilly and Visa and Berkshire Hathaway. Like, the S&P 500, and this is something that's really important for people to understand because this is the index that people know.
Right.
It is a hugely concentrated index now. I remember when it, just 5 years ago, it was 25%, and everyone's like, wow, that's crazy. It's 25%. And it just keeps growing, which is, obviously on the one hand is great if you own these companies, but it does create some risks in the market overall.
And also maybe it's self-fulfilling prophecy because people buy the index, right?
Correct.
And by the way, we believe in buying the index, right? Not a lot of people have the time or the skill set, frankly, or the ability to pick up the winners, right? And actually, all the research shows that a lot of people can't pick up the winners.
Most people are having a hard time out picking stocks.
So if you pick the index, you're going to get 35% of your money in these 7 companies, right? But that's where the risk is, right? If NVIDIA doesn't report good earnings next quarter, next month, it's going to be a really tough. The index, NVIDIA can go down 40, 50%.
Yeah.
Right.
Or even with that said, right, let your quote safe, NVIDIA has had an historic run. It's the darling of the market. I think we can agree that it's probably the most risky of the Mag 7, maybe Tesla, which I think has gotten a little bit more love in the last month. That it's kind of we're putting it back in. Again, they sold more cars. I'm curious if they sold them at a loss though, given 0% financing. But regardless of that, this Magnificent 7 right now, like, I think NVIDIA is one of the more risky ones. The safer ones, like your Apples and your Google, Microsofts and all that, have all had multiple expansion also. We're projecting earnings, and we'll talk about earnings in a second, to go up, but they've all gotten more expensive as companies.
And I think that's a testament to the dominance for American technology companies.
Correct.
Right? I mean, we're talking about these companies being worth $2-3 trillion each.
$3 trillion. There's 3 companies that are above $3 trillion now. Apple and Microsoft are 3.5 now.
This is like bigger than most countries in the world, right? So I think what's happened over the last few years is these tech companies have become so dominant, right? And they have generated so much revenue. I just saw this morning that the top 5 tech companies have over $400 billion in cash deployed,
which they're now paying in dividends, which is kind of a new trend.
Trend that's happening, right?
That's happening, which is great. But again, if the quote safe companies, right? Apple, Microsoft, Google, let's call them. I would call those 3 probably the safest of the bunch, so to speak. If they miss earnings, right, then the market comes down. Because the markets tries to guess, right? The market tries to guess where earnings are gonna be. Right. And now all this hype is leading up to where this is gonna be, and if we miss even by a little bit, then the market starts to sell this stuff off.
So I think what we're trying to get to here is you have to understand what's driving these things. There's definitely a conversation in our circles about how concentration is probably not very good for the markets because, as you said, there's 500 companies and only 7 of them are. And
that's just the S&P.
That's the only.
We're not even talking about the Russell 2000, the Russell 1000.
We're not talking about the global market.
We haven't gone there.
So I think that's. again, exciting that our companies, our economy is driving all these returns and so forth. But also, it's really important to understand that there is inherently a risk. And also, even during secular bull markets, you have to have correction.
For sure.
So you can't expect things just to keep going up all the time, right?
So we even had one this year. Like it was 5%, but it wasn't a big correction. And we even did a podcast on that. We
100%,
said right? And then the markets kind of rocketed back up from there. You know,
that's healthy, if anything.
For sure. And there is a possibility that we're going to have another correction before the elections, right? And again, it's always important to note that corrections are normal, dollar cost averaging, the stuff we always talk about. But if you keep your eye on the long term, the gains can be huge. And if you're looking at this as a secular bull market, and we've been talking about the 90s as the analogy, right? I think the 90s are such a great analogy for where we are right now, for multiple reasons, right? We had, in 94, the Fed raised rates a bunch. Just like they did in 2022. Everyone was worried that was going to kill the economy.
And we had a very mild recession, I think.
Correct. Which we avoided here. Well, depending on your definition of recession in 2022. If you work in
commercial real estate.
Well, that for sure. But, we technically had a technical recession in 2022, but it was a trade deficit, whatever. Regardless, it's similar. And then the Fed pauses. And then we get this thing called the PC. Right? And PCs existed before, but Windows 95 changed the game for everybody.
100%.
Right? Just like ChatGPT changes the game for everybody going forward now. And in 1995, we had a huge run. But between 1995 and 1999, and we'll talk about bubbles, and whether we're in a bubble and what this all means, because the markets are expensive on a current valuation level. But the markets can stay expensive for a long period of time.
I mean, relatively to what they were in the 90s, they're very cheap.
So at the late 90s,
At the late 90s, right?
So to give you an idea, basically between 95 and 99, the market went up an average of almost 29% a year.
Which is nuts.
For 3. That's the S&P. That's not the NASDAQ, which the NASDAQ doubled from 99 to 2000. And then it just collapsed, obviously. So the markets could stay overvalued for a long time, but you got to be careful because what followed that was, and really it was unfortunate because we had a double whammy at that time, right? We had the dot-com bubble burst.
September 11th.
And then we had September 11th. So we had a 3-year bear market after that. We were already kind of coming out of recession in 2001. And then 9/11 happened. And obviously that was a huge, rocked everybody's world. So, and these are things you can't plan for. And this is the important part of investing. Okay. What happens when things go bad and how do you react?
And again, I think that's such a great question, right? What do you do and what happens, right? We think of ourselves as capital allocators or financial advisors. Our goal is not just to make the most money for our clients, but really to help them make better decisions about where their money needs to be. So when things are tough, we're not forced to make stupid decisions. Right?
Absolutely.
I think that's again, we have to go right now and make some diversification decision because things are very expensive, or things have gotten expensive, or maybe we own Nvidia, or maybe we have too much tech now, so we have to go back and have that discipline to go back and sell those things,
which is actually the hardest part. People think buying, when you do what we do, for emotionally, when the markets are down, it's hard for us because our clients are all concerned, and we obviously don't want them to feel bad and be losing money temporarily and all that. But the hardest thing for an investor to do is actually to figure out when to start selling some stuff. Because you can look like an idiot for an extended period of time if you start selling things.
Markets can make you feel stupid a long
I mean, I'll throw myself under the bus here. I've been selling and taking profits on Nvidia for myself for the last 6 months, and obviously I joke and I go, I mean, who does that? What an idiot I am! Like, who does that? I don't feel badly about it, but I know that if we always play this game, like if I hadn't done that, this is what would happen. But eventually you understand that number one, I don't want to lose sleep knowing that such a large portion of my money is in one company. Right. But it doesn't feel great when the market keeps going up.
Right.
But eventually something might change. And we have to avoid the behavioral mistakes, which is getting overzealous when markets are flying. And then getting too conservative when markets are falling.
Yeah, and that's exactly, I think working with a firm or advisor like us is really helpful temper some of those emotions, right?
Yeah.
And being able to say, okay, sometimes I'm doing well. How diversified should I be? What other asset class should I be looking at?
Yeah.
You know, and really trying to be contrarian in your views sometimes, right?
Yeah.
Now, we are very excited about this secular bull. We're very excited about what's going on, all the innovation. And going back to the 90s, I think the name of the game is productivity.
Yeah.
When you have a new innovation like this, what it's going to do is going to create so much more productivity for the economy, which just helps create more wealth.
Sure.
Right? This is why everyone is spending on data centers for NVIDIA right now, because they know using generative AI, business has become way more productive and is going to kind of trickle down to the bottom line, right?
Yeah. That's the hope.
That's the hope.
Assuming this iteration, there are the arguers who say, this iteration of AI might not be the AI that we actually are really seeing in 5 years. We don't know.
Nobody knows, right?
We don't know. That's why so much money though is going into, they call them the hyperscalers, right? The Amazons and the, Googles and Microsofts, because if you're playing let's call it defensive offense, right? You want
defensive offense?
So this is it. I'm about to explain it right now, okay? And then once you all start using
strategy that Ayal just started.
I just created it at this second. Basically, right? You can buy NVIDIA. Everybody knows NVIDIA. They make the chips, great. But if you're buying the hyperscalers like Apple and Microsoft and Google, you know that these companies have such a well-diversified portfolio within their own companies. You're buying not just AI, you're buying their core businesses, you're buying the cloud, you're buying all this stuff that is baked into these, ecosystems that they've created.
You're betting on the winners.
You're betting on the winners. And there might be other winners that have bigger returns, right? There might be, XYZ company who is the new AI darling that is an amazing company that we don't know yet.
Right.
But you can win with AI with the big companies and not take on a huge amount of risk of something, knowing that something might die and burn out.
Yeah.
You know what I mean?
And again, that's how you think of your investments, right? Like if you're a VC investor, private equity firm, you're willing to make those bets very, very early on, because you're going to have 20 investments and maybe 2 of them are going to pan out, but they can pan out hugely, right?
Sure.
If we are like us, that's not the game we're in, right? That is not what we're trying to do.
Because most of our clients are not interested in that in general.
100%.
It's all about managing goals-based investing, risk. It's not about whether you beat the market or not. It's about what's the right investment for you and what are you going to do to get you to where you need to be, and also make sure you don't make the wrong decisions when the time comes.
That's exactly it.
And you do need to diversify some, right? And the S&P is not just the diversification tool. You need other indices. We need to look outside the U.S. We need to look at smaller companies. There's all kinds of things that's not just the S&P 500 or the NASDAQ or whatever.
Yeah. So I think we hammered that point.
Yeah.
Let's move on and talk about one of the biggest questions that I'm getting right now, which is we have an election happening. What do we do?
Run, hide. Just wait for it to be over. No. Frankly, really, my answer to when people tell me that is don't do anything.
Yeah.
One of these two guys are going to win.
Yeah.
Assuming, Biden stays in the running, which I think he is.
Yeah.
I don't really care. I think we could all kind of agree that whatever side you're on, we're all slightly disappointed in the outcomes.
Yeah, I don't think anybody is excited. That's
we have your hardcores, but yeah. But it's important, and I think I want to talk a little bit about elections, not just in the U.S., but we had a couple other big elections in Europe. But it's important to note that politics usually only moves the needle on the short term.
Sure.
Right?
It's headline risk.
It's headline risk, right? And traditionally we've seen volatility around election time in the U.S.
Yeah.
That's not a bad thing. In fact, we would embrace that because the market has gotten a little bit.
If you know
expensive.
it's going to happen,
yeah,
you just prepare for it.
Just prepare for it, right? And you wait for it, and regardless of what side of the aisle you sit on, the world will not end if Trump is in power, and the world will not end if Biden's in power, and everything 100%. Will continue on, and AI will continue to be a thing.
And I think that's really the biggest lesson is do not invest based on your political emotions.
Yeah.
That's never worked. No. Markets have gone up under Democrats and the Republicans.
Almost the same.
And their civil wars and their, you know what I mean? Doesn't matter what happened, we somehow were able to get through them.
For sure. For sure. Because the market doesn't care about red or blue. It cares about green.
It cares about earnings. It cares about growth. It cares about where the economy is doing.
Exactly.
Right?
And again, neither Trump nor Biden are going to mess up an AI secular bull market.
Yeah, and we can have, we're not just saying this that they don't matter, right? Because we can argue here about policies and things like that, and they do matter in the in the grand scheme of things.
Sure.
But ultimately, I think the economy is much bigger than just one president or one party, basically.
Absolutely.
And that's kind of what we want to think about, right?
Yeah, absolutely. And again, you might be disappointed in the outcome regardless of where you are.
Right.
I feel like I'm going to be disappointed of the outcome regardless of who wins.
And that's what democracy is, right, by the way.
You know my premise. You know my thought. The politics is about who you hate the least.
That's a good point. That's how you hedge your emotions, guys.
For sure. If you love a politician, it means that there's a little bit extra going on. Yeah. But anyway, so the U.S., right, there's a lot of questions about that. The Supreme Court has been in overdrive recently also. So there's a lot of politics around, not just in the U.S.
A lot of headlines.
And in Europe, right, we had a British election. Again, that was a change, right?
So let's kind of break that down real fast.
Yeah.
So the Conservatives were running England for a long time.
For a very long time.
Yeah. England did Brexit, which is probably one of the worst financial decisions that a country has done, right? England has had the worst recovery since COVID out of any developed country. And then people are pissed.
Yeah.
So now the previous prime minister has called kind of the election 2 weeks ago, and the Conservative Party got hosed. Like the worst results in 200 years. So now the Labour Party, which is
the left side,
left side is fully in charge. I think they took 80% of the seats in the parliament. It's insane. Right. So you've seen in this country that's been under conservative rule for 12 years or so, moving fully to the left, right? And this happened also last week in France.
Well, I want to back up for a second because the French election is the crazy, the sequence of events in the French election going back to Macron, special election, whatever, it is like a Netflix drama here. It's the crazy. So you have Macron, who's I say Macron.
Macron.
Who's kind of a centrist, right?
He's a centrist.
Yeah, right. He's a centrist. He's a pro-business guy, right? Then we have these, snap elections happen. And then you have Le Pen, who is the complete hard right,
anti-immigrant, fascist, right. Who's been trying to change the image, So
walk us through the first part of the election.
So the first part is so there is this overwhelming feeling of, first of all, inflation has hurt a lot of people. Growth is not happening. So there is a lot of angst in French society around the economics and Macron, his policies and so forth. So what happened is they had European elections, right? Just think of it as just like our Congress. Every European country has a certain amount of seats in European Parliament. And they had these European elections, and the Front National, which is Le Pen's far right party, basically had a landslide.
Crushed it,
right? 33% of the vote, and Macron already had not majority in French government. So he's like, I would call a snap election, and it was a very big gamble because either they win. And we're just gonna deal with it.
It's like
or we try to coalesce around each other and create something that is different than what the far right has to offer, right? So that election happened this weekend, and The far left wins.
The left destroyed them, and everyone's like, "What just happened? We went from middle to far right to left all in like a month."
Yeah, so it's really interesting. I have a lot of international clients. I'm very in tune with what's going on there, and the choices are either far left fascist, far right fascist, or far left communist.
Yeah.
You know, so like if you think of yourself as a moderate person in France right now, you're like, what the heck just happened?
Yeah.
You know, so it's really, and then this is kind of tells you, I think, the effect of social media and the effect of, you know, people really focusing on what's wrong with them, and, you know, and really like these far right or far left parties bringing in just excitement, right?
Yeah.
Like, you know, it's really about turnout, right? And this is why, you know, what happened with Biden and him being, you know, frankly, should not be running.
Yeah.
And what's going to happen is he's just not going to have any turnout because people are not excited about him, you know?
Yeah.
So I think we're seeing this all over the world happening, right?
Yeah, it's interesting. You know, everyone was swinging right in Europe, and I feel like now they're swinging left in Europe, and in the U.S., we've kind of been swinging back and forth.
Yeah.
I don't think you could call Biden a far leftist. I would say he's probably like slightly.
I think the Dems have gone the dark side.
The Democratic Party, I agree, has gone very left. As the Republican Party has gone very far right.
Correct. Yeah.
But I don't think Biden stands at the very far left. He's probably like, he's more moderate than, you know, a lot of the other people. And so there's this constant swing in politics, and we see this throughout history. Whenever there's disgruntled people, there's going to be massive change.
And the pendulum shifts.
Correct.
You're absolutely right. Like
Correct.
It's not. And by the way, that's kind of what democracy is. It's just,
for sure.
It's just messy. It's not pretty, you know?
It's not pretty. I mean,
so I think that's why for me, like, as much as sometimes all of us get emotional, all of us have things that we like, we don't like, it's really important to temperate your own emotions and don't kind of act fast, right, on things like this. And I think that's the biggest advice I give my clients is like, we don't know what's going to happen.
Sure.
But I know that I'm not going to rush into it and pretend like I know what's going to happen.
Correct.
And make decisions around that.
Correct.
You know?
I've been wrong on the last 2 elections. And I'm curious, there's this one guy, and I can't remember his name off the top of my head, who's got all these keys. He's predicted, I think it was 8 of the last 9 elections. And basically says,
is that
like,
the 92, what's his name? No.
I can no. This is a guy. He's an academic. I want to say he's at Stanford or something.
Okay.
And he has like these 7 keys to elections, and he's like basically like ignore polls, ignore pundits.
Yeah.
They're nonsense. Like they never. But he has these actual factors, and he was sort of like. All of this was before the debate that I read all the stuff, and it said all of this is, you know, Biden's got this, Trump's got this, and there's these like 4 in the middle that are sort of unclear. And so I'm curious. He said he's going to make his call in September.
Okay.
I'm curious to see what he says because he has accurately predicted, including the Trump win.
Really? Okay.
The 8 of the last 9 elections, and it's through statistical analyses. It's through these metrics.
You know how I feel about predictions. So,
but what I'm saying is if you're gonna predict, right? They're all guesses, but at least you're making an educated guess based on data versus based on what the guy at Fox or MSNBC is saying.
You, like,
you know what I mean? Like it's just all nonsense. And if you're doing a poll, and this is kind of his point, if you're doing a poll, like you're not controlling for the way scientists and statisticians do polls is they control for many factors.
Sure.
When these like polls, these exit polls, like you're not controlling for anything.
Yeah.
And especially if you're like, oh, you know, I voted for did you vote for Trump? If you're not like a hardcore Trumper, you might say no.
Yeah.
Right? Like, so you're just not gonna answer.
100%.
Yeah.
So I think it's go ahead.
I was to say, to recap, right? We talked about the first half of the year. Second half of the year, historically speaking, if we have a good first half, the second half tends to be good also.
And that's kind of what I want to level with. Like exactly where are we going from here, right?
Yeah.
You know, selling may go away. If you did that,
didn't work so far.
Didn't work out that well, right? But usually, when you see all-time highs, you're gonna see more all-time highs.
Yeah.
You may have corrections. They may happen here or there, but the reality is earnings are coming up. So we're going to have earnings coming up this week and beyond, and we're expecting earnings to accelerate into 2025. Companies are going to make more money.
Yeah.
Right. Rates are going to come down, which also going to be positive for real estate, hopefully for just the economy in general, doing better. The real estate sector has been really struggling over the last year or so, and it's a big part of the economy. So there's a lot of things that could happen that could be very, very positive going forward. So I think, as you said, if you had a good first half, usually the second half should be good too. Yeah.
It's important to note that it might not be the same investments though, that we might have a rotation. We might have, and again, as this AI trend that we talk about, right, we could call it AI/tech, like it doesn't have to be fully led by AI only. There's a chart that, we kind of looked at that shows that basically since the bottom of the market at the end of 2022, technology sector has rallied like 85% or something like that. Yeah. And then there's one sector, I don't know if it was real estate or utilities or something, that's actually negative still from there. Right. So there's a huge discrepancy between the winners and the losers here, or the winners and the non-winners. And what people don't know yet, what the next fourth industrial revolution, whatever you want to call it, with this sector right now is, how is AI going to affect everything else? Yeah. How is it going to affect utility companies and real estate companies and healthcare companies? Yeah. Because we have right at the top, we have tech, communications, and we say communications, but it's Google and Meta.
Facebook.
It's Google and Meta and Netflix, basically. Right. And then, consumer discretionary, that's your Amazons and your Teslas and things like that. And then everyone else has kind of been a loser since then. Yep. So once AI hits all those things, we'll hopefully see the rest of this market sort of pull its own weight. And we might see, maybe the Mag 7 don't do as well. Yeah.
And listen, I think this is what's beautiful about capitalism, right? Yeah. It's, I think we talked about politics a little bit, right? The capitalism is by no means perfect, but it's by far the best system we got. Yeah. So what happens when change like this is in effect, people who are allocating capital will move it towards areas that are more efficient, which ultimately will help better businesses thrive, which hopefully will help people's lives. Right? I think that's really the reality of how it works.
Yeah. And I think it's important to note that, there is a fear of AI and job loss and all that kind of stuff. And it will happen. Yeah. It's creative destruction, and we get it in every cycle.
It always happens.
Right. But it's important to note that throughout our history, we've incorporated technology. Yeah. Technology is a part of human nature.
It's going to be a net positive.
But, going back to, the dawn of man, right? Mm-hmm. Like, whether it was fire or the wheel or AI, like, we've always used technology to enhance our species. Yeah. Right. And there's always technophobia in the beginning, right? Whether it's people like, I talked to some people last week, there's no way I'm getting in a self-driving car. There's no way. I go, even if all the data shows that accidents will go down by 80%, I'll never trust it. I go, well, I don't trust you on the road, frankly. So there's always technophobia. There's always the risk, that jobs are going to be lost, and they will have job losses. But it's important that people learn these things and incorporate it into their lives. And ultimately, we hopefully live for a better society longer. And again, I'm going to circle back to where we started this, which is everyone always feels like it's the worst time they've lived in.
Sure.
Always, which is interesting, given how good our lives are relative to where they were 100 years ago or 50 years ago.
I think we should stop at that because that's a positive message going into.
Absolutely.
I think disruption is part of the cycle. I know people are pissed, but
change is scary.
Change and so forth. Yeah. But ultimately, things will always get better. So
that's the 80% optimist and the 50% optimist, straight from the horse's mouth.
Nice. Enjoy your summer.
All right, guys.
Cheers.